Nike's Win Now outlook might be the start of a slam dunk for investors. Since it posted a surprise sales boost during its fiscal first quarter earnings report, the stock kind of got a sprinkle of fairy dust. It has gained about 4.5% this week. KeyBank upgraded the athletic apparel brand from sector weight to overweight, with analysts noting, quote, the sport offense is resonating with consumers through sharpened product silos, improvements to innovation, and more immersive marketplace activations. That's so research speak. Okay, despite his turnaround strategy pleasing shareholders, CEO Elliott Hill is still warning that sales during the holidays will be sluggish, and he expects the company to take a tariff hit worth about $1.5 billion. Will that set the tone for the rest of retail, just as the sector kicks off the fourth quarter and the all-important holiday shopping season? Joining me now in a Fox Business exclusive live in studio is Tanger CEO Stephen Yalof. Well, tell me what you're seeing, because you have your finger on the pulse of a very savvy consumer who is looking for high quality, but at a better price. Well,
if you think about last year, there's always going to be noise in the marketplace, and in the outlet sector, which is where we're famous for our outlet shopping centers, value, brand. Last year, this time, we decided to start our holiday selling season a little bit early. Halloween's very important, and then you cut right into November 1st, and Christmas decorations go up. So what we did was we started Black Friday every day in the month of November. So navigating some of the noise in the marketplace, we knew we were going to get that customer in a little bit earlier.
Are you telling me that shoppers are front-loading right now all of their holiday gifts?
Well, let's go back to school, because I think it's important. A lot of tariff noise in the marketplace in April. We decided to launch back to school as early as June 1st, thinking that if the consumer was worried there wasn't going to be product in the stores, if the consumer was worried that tariff pricing was going to raise that price to a number that perhaps made some of those products for them out of reach, we figured we would start early. And, it turned out to be a great driver of traffic to our centers, in fact, getting that customer in a second time. So that same thing holds true now going into November, particularly in the value space.
But Nike is just one of the, 3,000 plus stores you work with among your 41 shopping centers. What are you hearing from tenants in your shopping centers right now?
Well, look, there's the tenants' two sides of the story, right? There's the product side of the story, and I'm out in the marketplace. I'm in shopping centers all the time, and there is plenty of product, particularly in our outlet stores, our full-price stores as well. But when you see a lot of product in the outlet stores, you know that it's going to be a really good holiday selling season. It's a great indication. Product's there, it's marked down, the consumer knows they can get the brands they want at the best possible value. I think that's going to be a really important storyline going into this holiday selling season.
Tell me about your occupancy rate. This is what I found incredibly interesting, because you walk up and down some of the main shopping arteries in Los Angeles or Chicago or New York, Madison Avenue. Every fifth store is boarded up or for lease, empty. But tell me what you have as far as your occupancy rates are.
Well, right now we're in the high 90s. And I think the reason why is because, first of all, outlet shopping centers, if you think about just the cost of doing business in outlet for a retailer, it's probably one of the best or cheapest way for brands to get their product in front of the consumer. Our rents are relatively low compared to the streets, compared to the full price arena. And it gives the opportunity for the brands to bring that product to the consumer in a format that's engaging. We have an average of 70, 80, in some instances, 100 stores in our shopping centers. There's variety. There's things to do. And so when a customer comes and puts their car in our parking lot, they visit a number of stores when they're there.
Well, I don't know if you noticed, but we just saw another failed vote to reopen the government. And we know one thing, that data will not be coming from the government. We would normally get retail sales data. Right. August, we saw retail sales up 0.6% month over month, up 5% year over year. How much do you weigh, or how much do you lean on, say, a September retail sales report in October? It's important to you, isn't it?
Well, look, we get our traffic data on a daily basis. We don't get our sales information. That lags. We wait for the retailers to share it with us.
So you are less dependent.
We're less dependent on that piece of information, but the early indicators that we see, that we know that the market is still strong and healthy. The amount of product that we see in the stores is number one. how the retailers are discounting or not discounting, which is reflective of how what their pricing strategy is going to be going into the selling season. And then lastly, it's the velocity of new deals that the retailers themselves are making in our space. Retailers have not pulled down their open to buy. They're still very anxious to add new stores. There's not a lot of new retail development happening in the United States right now. There's been some consolidation in the department store business. Because of those things, retailers are looking for places where they know they're going to see customers, they're going to see traffic, and they can do business.
This all sounds great, but if I put money into your stock a year ago, I'm not really up that much. Why is it not translating to your stock? You're underperforming the S&P.
Well, if you take a look at what we've been doing over the last 5 years, we've been outperforming. And I think that there's a little bit of a market stabilization right now because people are putting money in other sectors. However, I think relative to the rest of our marketplace, because we look at relative as well as absolute, our relative business has been very, very good. And I think a lot of that has to do with that value piece of our business.
And I don't ignore the fact that you have a pretty decent dividend, 3+%.
Well, that's right. Exactly. And, you know, I mean, we pay out a share of our dividends to the consumer. We also retain some of that cash for free cash flow. And I think that our investors are looking at that story saying, we want Tanger to invest. We just bought a new shopping center in Kansas City. 2 weeks ago, we closed. Our investors is saying, we love what you do when you own a shopping center. We like how you program it. We like the variety that you put in the center. We like the retailers that you put in those centers. And we're banking on you to grow the value of our stock.
It's too early for me to say Happy Hanukkah and Merry Christmas, so I'm not going to do that. But I know your shoppers are probably looking for exactly those items to put under the tree and by the menorah. Who knows what? Good to see you.
It's great to see you too. Thank you.